I'm short Palantir. I wouldn't recommend shorting Palantir, but that's what I'm doing, so I'm going to explain why I'm short Palantir. I had been short Tesla. I recently covered it for about a 19% gain, so that worked out well. My shorts are small, my longs are large, so it kind of works out where you can't lose that much money if you're shorting. Alright, so I'm going to go over why I'm short Palantir and have some slides on the side. Alright, so this chart shows the price to sales ratio of various software as a service companies, some of the fastest growing ones. It's easy to see that in the 2021 period, there was a lot of speculation, and so the price to sales ratios were high. But it made sense to a certain extent because people were staying at home and sales growth was exploding, which gets me to the interesting point here. So this is a little bit old, but it has Palantir at 73 times sales. It changes day to day, but this is around where I shorted it, so it makes sense. So Cloudflare grew sales 52% in 2021. In 2020, Snowflake grew sales 173%. And from 2019 to 2021, Zoom grew sales 702%. But in 2004, Palantir was expected to grow sales 25.6%. So you can see the sales growth doesn't really add up. Some of the price to sales multiples were high, especially when Snowflake went public. It had a really high price to sales ratio, but it was growing sales at 173%. So the ratio doesn't really add up if you're looking at growth and sales and the price to sales ratio. It doesn't add up. It should be growing faster if it wants to have a 70 price to sales ratio, because that's always going to compress over time. Either it's going to compress because the stock falls or because sales rise. So I just have a chart of a few speculative bubble stocks in the 1999-2000 tech bubble boom. We have Cisco at 148 times earnings, AOL at 217 times earnings, Oracle at 152 times earnings. And and the best companies are the ones that are still around now, but their stocks crashed, and some of them don't exist anymore. So that's just a comparison to now. It's similar in the sense that we're in like an AI bubble compared to the internet bubble, just two different bubbles. So investors, the Palantir people aren't really thinking too clearly, but they do say that it's like NVIDIA, because NVIDIA's growth exploded. But NVIDIA's growth is a lot faster than Palantir's was. They're not the same at all. So NVIDIA's sales increased 379% from fiscal year 2023 to fiscal year 2025. The fiscal year timing is a little bit off for all of them. So, and then Palantir for a similar time period from 2022 to 2024, their sales were only up 46%, which shows that the growth are not comparable. Palantir is linear, NVIDIA is explosive, it's exponential. So, and the key point is timing, right? So NVIDIA had its growth already because the AI boom has been really strong in 2022, 2023, 2024. Those are the big years for the AI boom. 2025, 2026, and 2027, might end up being the bust. So the idea that Palantir is going to have faster growth than NVIDIA had, the time doesn't add up because the AI boom is going to turn into a bust. It doesn't work. So Palantir is not the next NVIDIA. They're both on the same time horizon. So I think that Palantir's growth is going to fall in the commercial business. Alright, so this just shows Palantir's market cap compared to like companies in a similar market cap range, and then its sales. And the sales aren't really the same. Now, of course, obviously Shell and Philip Morris and GE Aerospace are growing much slower. Intuitive Surgical is growing pretty quickly, but so they're different. It's just funny to see like these large companies compared to Palantir's income. I mean, like 476 million compared to Intuitive Surgical's 2.24 billion, and a similar market cap. It's wild. All right, so I found this. There was this article, and I put in for a correction, and the article was changed slightly, but it's still a stupid article. But the valuation part is funny. It's like funny to see what people who are bullish on Palantir say, because you get to see what you have to believe to think that it's a good investment, or they don't understand basic numbers. So they have the Palantir had a 650% premium on its valuation. So its non-GAAP PE was 188 compared to the median of 25, which is funny. But the part that I corrected with this article, it got changed, but it's funny to see what they said beforehand, like what they were actually thinking. It's not a typo, it's just, I don't know. So they have they have Palantir's earnings per share expected to grow at 1,125%, which it doesn't make any sense. Like, it's not going to grow 1,000%. That's not even correct. It's so they have it they have it projected at 1,125% earnings growth, but it's not going to grow 1,125%. Doesn't even make any sense. It's pretty funny. Their actual earnings growth is expected to be 52% in 2024 and 25% in 2025. So I like, it's just the fact that somebody would write that and they're like a bull on it, and makes it like, it's just like a sign of the times, is what I think. It's just a weird thing to say that their earnings are going to go up 1,000%. They're only going to go up 25%. Like, what? And that's a bull, like an article. It's not somebody on social media. So now I have just a little glimpse of what actual users are saying on Reddit of Palantir for their commercial business. And keep in mind, Reddit shows you what people are agreeing with and what people are disagreeing with. So, honestly, it might be the worst tool I've ever used. I refuse to work for a company that uses it ever again. Foundry is if you took Databricks and made it 10 times harder to use, and took away notebooks for data science users. It almost feels like a scam how unfriendly it is, and how shoddily different things are implemented. Go with Snowflake and avoid Foundry at all costs. 82 upvotes. Net upvotes. It's borderline unusual. You know how Hulu constantly freezes, crashes, you can't be fixed. Any of the menus, random, unexplained things happen while you try and hit the back button. Imagine doing data engineering in an app like that. So they're saying Hulu is a bad app, and it's similar for data science, except not for watching videos. And then I have a screener. I just looked at the most expensive on a price to sales ratio. And if you look at Palantir, it's like 170 billion compared to like tiny things. Like tiny companies will randomly have like a high price to sales ratio, maybe because they don't have any sales yet, or they have a very tiny amount of sales. But companies that have like $170 billion, $180 billion market cap don't typically have 60, 70 times price to sales ratios unless we're in some sort of bubble. Now, if you remember the original chart I showed, compared to like Snowflake and those companies where they did really grow faster than Palantir, their stocks did bad. So they had price to sales ratio compression from declining stock price and high sales growth. So that's like the best case scenario. The worst case scenario is Palantir sales miss expectations, they don't grow as fast, and the stock has to compensate for that and fall even further. So I'm sure Palantir, I might not be short for that long. Depends on when it falls and stuff like that. So yeah, this is my video on that.